What's going on, everyone? We're going to take a look at Tesla very quickly. So happy Friday. I know today's Thursday, but we're going to be off a nice long weekend for the holidays. I hope you guys all get away from the screens a little bit, enjoy time with family and friends, do whatever you got to do, decompress, hit the gym, get a massage, have a drink, whatever it is that you need to do to kind of decompress from the overall market. So bulls, as of right now on the NASDAQ 100, still showing relatively strong price action, right? So if we kind of look quickly before I get into Tesla's daily chart, we look at the NASDAQ futures here. Yesterday came down into this rising 10-day moving average. Let me blow this up here. This blue line is the 10-day moving average. We're looking at the daily time frame. Yesterday we came down tested. Now this morning in pre-market and right off the open, we had a little bit of a confirmation down. That price was around 13,000 all the way down to around 12,945. So just about a 40-point flush before buyers stepped in. And that's why I say that you still have to continue to give these bulls the benefit of the doubt. Now, going into next week, we've got a very clear line in the sand. Not only did we test the 10-day moving average once, but we actually broke it now. So this bottom wick here, if we do kind of come back up, test the 5-day moving average, trickle around, fail to break to the high side and start to lose this area, this would be your short position. What we would be trying to target is this 20-day moving average sitting at around 12,789. Now this video is not about the NASDAQ, but I just want to give you guys an overall context because Tesla still has some work to do. So Tesla is still below its 5, 10, 20, 50-day moving average. Now, even though Tesla is putting in a little bit of a hammer candle here, it's got some room and some work to do. 188 is the next price target that I have on this continued dead cat bounce on Tesla. Even though the market is strong, Tesla is still below its 50-day moving average. We cannot get bullish to where we want to swing and hold Tesla until we get back over that 50-day moving average. And now, if you're currently in a position, what's the best way to kind of manage yourself, right? Well, as of right now, as long as we don't close below today's lows, 179, you gotta kind of take your profits or see if we can start to clear out some of this price action here. Is the overall market going to make a new high? If so, I would expect Tesla to follow, just be a little bit more delayed. Now, this is what I can kind of see happening going into next week. I can see a continued bounce next week into that 190 to 193 area, chop around and consolidate. If the overall market does start to pull back, you could see Tesla start to get rejected. And if we lose today's low here, that's going to be a short position for all short-term day traders to try to take that into 171. That's going to be a big macro trade there for the short-term players. 180 to 171, we would be looking at essentially a 9 to 11 point run. That's what you're going to want to kind of be involved in. Now, if we do, right? So if we do kind of continue to bounce here and then we chop around, as long as we can hold this rising 20-day moving average sitting at around 190, 188 area, what I would like to then see there is a nice pop over the 197. Let's get over the 197 here. That's just declining linear regression. Put in a new high, back test, consolidate, hold, and then move higher. That would be essentially the move that you're looking for. But I just do want to point out, ever since we did close below this 50-day moving average, that short-term uptrend that we've been in since the beginning of March is broken. So just be careful now, because as we broke down here, this could act as a level of resistance to start to test the 171. So you can look at it from two angles. You can either stay out of the way until we get back over the 50-day moving average and the 5-day moving average, and then kind of reevaluate your trade somewhere in here when we hold and then play the pop. Or essentially you can kind of let this ride into this supply, get rejected, and then play the rejection, use a high as your stop here over the 5-day moving average, and then play it back down towards the low wick, and then hold the runner if we do break for that 171. That's how I'm looking at it on Tesla. Now, if I show you guys a shorter time frame, like the hour time frame here, I did put in a level in the Discord this morning on Tesla to the downside, and I want to kind of show you guys what I was looking at here. So if we look at the pre-market action on Tesla, okay, So the pre-market low on Tesla was sitting at around 182. So 182 was your pivot. What you needed to see is a breakdown below 182 and then get confirmation, right? Then we would be looking at the Bollinger Bands here to kind of lock in those profits. Came down to the Bollinger Band, tested that, bounced, so forth. If we look at the 5-minute time frame to kind of see how that played out, right? So if we're looking at this pre-market low here of around 182, you can see that opening 5-minute candle not only broke through the 182 but flushed all the way to 179. Now I would not be surprised if a lot of shorts got trapped as they started to chase this move here into support, which is a linear regression that you can see here. Started to get excited once we broke it, chopped around thinking we're coming for the next leg down, and then it just ripped, right? So how do you play that? Well, how you play that is by first identifying, are you a scalper, are you a day trader, or are you a swing trader? If you're looking for longer moves, you've got to look at the daily time frame. In that sense, maybe even the 4-hour, right? So if you're looking at the hour to kind of get your pivots, or you're looking at the daily, kind of looking at the pre-market to get your pivot levels, and then you're trading off, let's say, the 5-minute, well, then you absolutely have to respect the shorter term supply and demand zone. So if this is your play of a break through the pre-market lows, well, you have to understand that those 182 only had room to about 181. Okay, so that's only a dollar move. So you automatically have to assume that if I get this dollar move, half size needs to come off, and if I get 50 cents, 60 cents more, I need to start thinking about taking the rest off and then holding my runners to break even. So you would have essentially took this clean dollar move. This was very stress-free, and then it actually dropped down to 180. So that's a $2 move in less than 5 minutes. If you're a day trader or a scalper and you get a $1 or a $2 move in 5 minutes, guys, that is a home run. You can't expect it to go another 4, 5, 6, 7, 8 points. You can't expect it to go to 170. Now, could it? Absolutely. But at that point, you have to really reflect on that move as a business, right? As a business, what you're looking for is pure greed, right? If pure greed, we're talking about $2 move in 5 minutes. Even if you bought 100 shares, that's $200 in less than 5 minutes. I don't know anywhere, normal 9 to 5 job, any decent middle class 9 to 5 job where you're going to make $200 in 5 minutes. Take the $200 in 5 minutes, reassess. If you want to play something short later, then give the first opening candle range to close. And so for example, if you kind of look here at the opening candle, this is your opening candle. If we were truly going to flush down to 170 or 175 today, well, then it would have had to confirm 179. So we would just wait for the 7 a.m. Pacific Standard Time candle to confirm that low, and then that would be our confirmation to go short. But instead we didn't do that. I'm sure probably trapped a lot of shorts there. That comes with inexperience, and that comes with not understanding where your levels are at. So I had someone last week say, you've got a shit ton of indicators or moving averages on your chart. That's a joke, right? Well, if you don't know where the stocks are going to stop and you don't know potentially where they can run, it's not really a joke, right? I would rather understand that, hey, here's pre-market lows here. If I take my stab here, use the previous 5-minute candle as my stop, I take my chances here, take the dollar move here, hold a runner to see if we do crack, and then clean up my position as soon as we wick down and wick back up aggressively and get out of the position, or leave that last runner to break even. Then, hey, who's right and who's wrong? Is it smart or is it stupid to have this many supply and demand zones on your chart? Well, I think it's pretty smart, because then you kind of know where should I be taking profits off? Where should I be holding? What should I be looking for next? Now, the next trade that should have ultimately been looked for after that is, being that we've been trading under the 20-day moving average on a 5-minute time frame, well, if we can get back above it, and then we can kind of confirm that, that would signify a short-term change in trend. I want to actually show you on the 1-hour chart something else that I alerted in Discord here to kind of watch out for on Tesla. Was, if you can see here, we've been trading under the 20-day moving average on Tesla's 1-hour chart. And if I can kind of zoom back here, going all the way back to Tuesday, we initially lost the 20-day moving average on Tuesday on a 1-hour time frame. The price was sitting at 193. All we've done since then is drop down to a price of 179. That's over a $10 move, $11 move, $12 move in just a matter of 48 hours, guys. So if we could get back over the 20 period SMA here, and if you kind of see, look at these candlesticks here, that bounce that we had at 7 a.m. took us right into the 20 period moving average. The candle at 8 a.m. took us right to it, right? So if we confirm this on an hour candle, let's go ahead and take an opportunity to go ahead and scalp this move here. The entry price was 185. That's the level that I put in Discord. Kind of told everyone, watch that 185, watch that 20 period moving average. Over 185 ran up to a price of 186.28. That's a $1.25 move in a matter of an hour. Guys, if you're playing one lot, which is 100 shares, that's $125 in less than an hour. If you're playing 2, 3, 4, you can kind of do the math. If you're playing options and you have, let's say, 10 options contracts and you get a $1.25 move, guys, you're making $400, $500, $600, $800 on this potential move, depending on how those premiums and are moving, and if you're playing this week's expirations or next week's or so forth and so forth, and how fast the move is coming. But what the point I'm trying to make is that if you understood, right, if you understood based on my strategy and based on these supply and demand, it's not just my strategy, these are available to everyone. I kind of show you guys and help you guys how to use it to the best of your ability. But what I'm saying is, if you understood that we've been under this 20-day moving average for the past 48 hours, and as price action starts to come up here once again, if we do not get rejected and roll over and then take out the lows, if we start to confirm, potentially where could we be heading next? Potentially we could be heading to 189 on Tesla. That would be the next move. But before we get to 189, we're going to need to get in test to this Bollinger Band at 187. That would be the price target that I would be looking for on Tesla. So my Tesla price targets, even if we're going to roll over and go lower based on the daily chart, right? The daily chart shows us that we still have room to 171, but we could be looking at a little bit of a dead cat bounce. Now, if we get that dead cat bounce, first price target's going to be around 187. The next price target's going to be 189. And then over that, we're looking at around 190. If we're going to continue to bounce, those are the three levels I'm going to try to target to the long side. And then from there, I'm going to wait to see, do we get rejected and roll over? I will use a high wick on an hour candle as my stop and ride this potentially back down to see if we do start to come down here and test these levels. After 190, I'm not excited about Tesla until we get over 194. Over 194 has room to 198, and over 198 has room to 206. I hope this video helps you guys, gives you guys a little bit of better understanding of supply and demand and how you guys can trade Tesla and use it to your advantage. If you want to trade with me, make sure to join evolutiontraders.com. All of that information is going to be sitting down in the description box below, and I'll catch you guys all in the next video.